Titan gains in trade ahead of the Akshaya Tritiya weekend. Reports suggest that the company could relaunch its gold price lock-in scheme for some customers for a short period.
NBCC surges over 2% after securing a 208 crore project from Puducherry's Public Works Department.
With fourth quarter earnings bolstered Mastech early in trade, the company reported a near 8% surge in revenue and 13% surge in profit after tax this quarter. Stock up 11%.
And HOEC gains after completing the repair and commission at its BAT field, testing gas production of up to 15 million cubic feet per day.
Container Corp higher in trade, almost 4%, nearly 3% rather, as Goldman Sachs upgrades the stock from neutral to buy. The brokerage firm says that the company could be at an inflection point.
Hello and welcome to Chartbusters. I'm Nash D'Souza. Joining me as always is Mangalam Malu. Well, Mangalam, the same old ping-pong game is going on, right? When you head towards that 17,700 odd, the bears are coming to defend. Now, the important part is we have seen ping will pong happen because, normally at around the 17,570 odd, as evidence has been over the last few days, if you buy, you make some money. So we're just around 30 points away from those levels. So let's see whether or not risk-reward favors. But otherwise, the markets are positioned as such that 17,550 level will hold out. Let's see whether that happens.
Let's see whether that happens or not. And as we speak, even the 200-day moving average has kept moving higher. So 17,580 or thereabouts is where it is positioned right now. So let's see whether the ping or the pong happens at those levels or not. But, just point to point speaking, Nigel, it's been such a comatose market over the last couple of trading sessions that we might as well put a net here on our studio table and start playing ping pong while we are at it. But, the mid-cap index is doing well today. The Nifty bank is doing well as well, up around 84 odd points. So let's see where we move on from here as well. But a bunch of stocks doing well in today's trading session. Titan is one of them. Of course, for the second day running, we've seen some traction on Titan. Yesterday it was slightly soft, but today, there are a couple of reasons why Titan could be doing well. One is the fact that, this is the Akshaya Tritiya week. On this Saturday itself is Akshaya Tritiya, which is an auspicious occasion for people to buy gold. And Titan is looking to, benefit from that by announcing its gold price lock-in scheme. What is the biggest fear that people have before buying gold ahead of these auspicious occasions? That today gold is at 60,000. Will it be 66,000 by the time Akshaya Tritiya happens or not? So Titan will allow buyers to lock in the price of their gold ahead of Akshaya Tritiya. This is something that they usually do for a short period and during the festive period if there is price volatility in gold, as we have seen. So this could be one of the bigger positives. But apart from that, yesterday as well, the company announced reduction of commissions and incentives to dealers. So that would enable margin expansion to the tune of 50 basis points over the next 2 years. And we saw CLSA ascribing value of close to $2 billion to their eyewear business as well. So things looking better for Titan.
Okay, all right. Mangalam, thanks a lot for that. Well, ICICI Securities, they reported a weak set of earnings in the fourth quarter. Surbhi joins us to fill us in with a quick analysis on that stock. Surbhi?
Thanks so much for that. So it was a weak set from ICICI Securities, but this was on expected lines as they were losing market share in their active client base for the last 10 months. Also, their trading volumes were lower on a year-on-year basis. On a sequential basis, their revenue was flat at 885 crores. Both their PBT and PAT were down 7%, mainly due to higher operating expenses and higher finance costs. When you look at their segmental data, their broking revenue was marginally higher by 4%. This was due to increase in retail derivative volumes. Their profitability was, however, lower by 3%. The issuer services segment, that has dragged down the revenues. There, the revenues were down about 74%, mainly due to decline in primary market activity, and the profitability was down 90% on a sequential basis. Now, we have two opposing views from brokerages. Citi has a sell rating with a target price of 440. They say that given in the volatility in the capital markets, the cost pressures are key monitorable. Also, they do appreciate the company's focus on diversifying its revenue profile, but the investment in these businesses is too high. The only silver lining, according to them, is the traction in distribution and wealth business. Motilal Oswal, on the other hand, has a buy rating on the stock with a target price of 530. They say their efforts to diversify their revenue and launch of new products will only enhance their revenue going forward. Company will continue to invest in human resources and technology, which could lead to a lower cost to income ratio in the future. They value the company at 12 times FY25 PE.
Okay, thanks, Surabhi, for giving us that quick analysis. But it's a good time now to shift focus to our special segment where we get you a few ideas for profit. Lekha Badlani of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Lekha?
Yes, thanks. So we think Krishna Diagnostics, which has lost nearly 50% of its market cap post-listing, merits a deeper look at this point in time. Now, Krishna operates a unique business model and provides pathology and radiology services through public-private partnership contracts at disruptive prices. The company has delivered exceptional revenue growth and robust EBITDA margins in the last 5 years. And the Krishna's business is also protected from the ongoing price wars in the pathology, as government-focused PPP tenders usually operate on fixed prices. Also, 50 to 55% of its revenues come from radiology, which is a niche market insulated from such pricing pressures. Now, Krishna has won 3 large-scale contracts since the start of 2023, having an aggregate annualized revenue potential of around 250 crores. The company has operationalized around 500 centers in the last 12 months, and none of the major contracts are expiring until next fiscal, thus providing healthy revenue growth visibility for FY24 and beyond. Now, Krishna is looking to leverage its B2B market presence to foray into the B2C, that is a retail market. The company also appears well positioned from a balance sheet standpoint, having more than 200 crore of cash and cash equivalents at the end of December 22, and cash conversion ranging between 80 to 100% historically. We believe Krishna has many opportunities to scale business further and continue growing, especially across the Tier 2 and Tier 3 cities and rural towns. Investors could look to initiate positions in Krishna Diagnostics as valuations look convincing for a fresh entry.
All right, Lekha, thanks a lot for that. With that, we'll take a short break. On the other side, we'll get you more on the markets, focus on a lot of stocks which are buzzing, get you all of that just on the other side. Well, while the Nifty is off the highs of today's trading session, we have a bunch of stocks doing well in the cash markets. Something like an SML Isuzu. This is typically the time where schools place order for their buses, etc. And that stock's seen a big surge, almost 13% higher on that counter. We've seen a big move on Force Motors as well. Titagar Wagons, all the railway stocks have been doing extremely well. So that's another one which has seen a bit of a spike. Another cash market stock which is doing extremely well right now is VIP Industries. That's the one which has moved to the high point of trade as well. Maybe ahead of summer, people are looking to travel, and perhaps this is a play on that too. But on the market itself, what is it that you should be doing given the fact that we're in a bit of a range? Sachidanand Uttekar joins in for a quick technical check. Sachi, we've been in this range for the last couple of days. In fact, 17,500 to 17,800 if you have to broaden it out a little bit. We're at around 17,600 right now. What do you think one should do?
Good morning, Mangalam. Mangalam, since the beginning of this particular week, we have been on the opinion that Nifty could slide towards that 200-day exponential moving average support, which is placed at around 17,520. If you look at the last 3 trading sessions, after a decisive move below its 5-day exponential moving average, Nifty has continued to respect that particular resistance. So even today, the 17,680 mark, I think that will be a crucial point. We are not expecting a closing above the same, and probably from an expiry perspective, we may see Nifty drifting towards 17,520, 580 kind of a zone. But eventually, I think we may close the day somewhere close to 17,600 itself. When we look at Bank Nifty, I think the data is completely opposite. We have evidence of fresh long additions. So there probably the range looks much more wider. That could so in case we decline towards that, I think that will be a good opportunity to create some fresh longs. On the higher side, we are expecting a swing back towards 42,600, 42,660 kind of a zone. So probably both the indices are diverging. It's better to be on the short side when it comes to Nifty, but when it comes to Bank Nifty, I think we may see a good opportunity in the second half.
Okay. All right. Well, I think we still have Sachi there. Sachi, we've got your outlook on the markets. What about individual stocks?
Good morning, Nigel. Nigel, again, since the market has not decided, so it's better to have a long-short combination when we are facing a trading session like this. So UBL, the chart structure is very interesting. It has been in a low top, low bottom sequence. On the weekly charts, we did see a rebound from its 200 weekly exponential moving average, which is placed somewhere close to 1400. If you look at the daily sequence, it looks like a classic, falling wedge formation right at the end of the trend. So probably we may have this evidence of a fresh bottom in place at around 1400. So we are expecting a good rally towards 1500 on a positional basis. So recommending long positions here. The stop loss should be placed at around 1420 from a trading perspective, and positions should be reviewed somewhere close to 1500, 1510. On the short side, I think ABB, the structure is looking more on the sell side. We have already seen some evidence of profit booking on the higher end. A double top formation is evident on its weekly and its monthly scale. Currently, the way it slipped below the 3200 mark, this purely looks like a fresh breakdown from a falling flag formation, exhibiting a target of around 3150. So we are recommending here fresh shorts. The stop loss should be placed at 3230.
Sachi, before we let you go, have you tried any of these innerwear stocks on your chart list? Because I'm looking at Page Industries, currently at the high point of trade. In the broader markets, you have Lux Industries, which is around 11.5% as well. Fundamentally speaking, the prices of cotton have come down, so that is case for their margins to expand. For Page Industries itself, their foray into athleisure and higher value products could do well for them. Your thoughts on these stocks from a chart standpoint?
So Mangalam, we usually avoid trading in this particular counter, but if you look at the structure, yes, Page Industries, the bottoming out formation looks very good. If you look at the immediate, support, I think that particular support was held on well at around 36,700. And the way we have seen a breakout from the consolidation, so probably we may see this rally getting extended towards 42,000. So I think it's a very good, investment stock. So the stop losses, I think, should be maintained on a weekly closing basis. So as of now, the way it confidently, turned from that level of around 36,740, I think your stop losses should be placed there itself, and we may see an initial leg towards 42,000.
Okay, all right. Thanks a lot for that. Well, we have Gravita that's flashing on the screen. They've increased the capacity of the existing recycling unit by around 40,000 tons at the Gujarat facility. So that's why I think that stock is reacting positively. But Concord, that stock is up nearly around 4%, following positive brokerage commentary. Mangalam, tell us more.
Well, as far as Concord is concerned, Goldman Sachs has upgraded their view on the stock. In fact, they've upgraded from neutral to buy, and the biggest reason for that is that they believe that stock is valued correctly right now. If you just take a look at Goldman Sachs valuation metrics, they believe that the stock trading at 22.5 times FY25 price to earnings is a little below the 10-year average of 25 times two-year forward earnings. That's the median valuation for the last 10 years. So which is what gives it some support. Apart from that, they believe that the company is at a bit of an inflection point as well. There will be more traffic shifting from road to rail, and that is something that would make Container Corp an important bet. At the same time, they expect, the earnings for the company to grow by almost 15.5% over the next couple of years as well. But, the larger point here, apart from the whole thesis of rail shifting and Container Corp being at a bit of an advantage given its monopoly status, near monopoly status in the terminals that it follows, is valuation. And secondly, the biggest trigger for them at any given point will be privatization more than anything else.
All right, Mangalam, thanks a lot for that. Well, for the time being, let's slip into a short break. On the other side, we'll get you more updates on the markets as well as stocks moving around.
Still with us here on Chartbusters and CNBC-TV18. The stock on our radar is Tata Communications, and focus on the back of a margin miss that the company reported in their fourth quarter results. The MD and CEO Amur S. Lakshminarayanan tells CNBC that they're comfortable with their current net debt to EBITDA levels and more about the business. Listen in.
I think barring one market for us internationally, all the markets have been firing in all cylinders, if I may say so. All posting in excess of 15-16% growth. If you look at our Asia Pac market or our European market, they have been growing at high teens. We appeal to both the cost side of the equation and the revenue side of the equation for our customers with our enhanced products. We would like to think for the next 2 years, customers are going to focus more on cost-led transformations that also delivers better experience for their customers. And if you look at last 3 years, and you pointed that out, our debt has come down quite significantly. We are quite comfortable in terms of our net debt to EBITDA ratio. We have a strategy of a good cash generation within the company, and our first priority is to invest back into our products and platforms as we've been doing in the last year and going forward as well. And anything excess, we are going to be looking at debt reduction as a priority. We also just announced, for example, an M&A transaction with a company called Switch, which we hope to conclude soon.
Well, the numbers look disappointing, but I think post that commentary, it appears the stock has recovered from the low point of the day. But a few more stocks we're tracking, and Sonal joins us to run us through the stocks that are in the news. Sonal?
Well, yes, couple of stocks on my radar today. HOEC, there's an update on their important well, that is BAT, where they'll be producing both oil and gas. There were some issues with respect to production, and now the company has informed the exchanges that repair and commissioning of BAT field is completed, and currently they are testing up to production of up to 15 million cubic feet per day, that is for gas, and they've issued a tender for gas supply at a price of 16% of the crude pricing on an average of the previous month, and the floor here is $9 per MMBTU. So there has been some headway here, and that is something that the street is liking. However, they do have a negative news in form of their appeal that they have made to a Court of Appeal of Malaysia. They've dismissed HOEC's appeal with respect to arbitration related to PY3 field. There were a couple of partners here, the likes of ONGC and the other names, and here they have not won that appeal. They will be going to the next level in terms of this particular litigation. Sula, they have announced the appointment of Mr. Riaz Amlani as an independent director. Riaz Amlani is the founder and CEO of Impresario Handmade Restaurants, which operates restaurants the likes of Social, Smokehouse Delhi, Saltwater Cafe and more, something that we've seen in Mumbai across the city as well. NBCC also in focus because they've secured a project worth 208 crore rupees from PWD Puducherry.
Okay, thanks a lot for that. So now, well, on that note, though, we have completely run out of time on this edition of Chartbusters. But as we end the show, we leave you with some commentary coming in from veteran investor Mark Mobius of Mobius Capital on emerging markets like India and China.
India is really a very exciting place to invest in emerging markets right now. But the good news also is that China is coming back. You were seeing the Chinese market now recovering. You know, China has underperformed and done very badly in the last few years. Now it's coming back. So people are getting more interested in emerging markets because China weighs so heavily in the emerging markets index. They're about 30% of the index. So I would say people have to look at China, most definitely India,